We got the Bank of Canada cutting its benchmark rate by 25 basis points down to 2.25. Its fourth cut this year, obviously signaling maybe this is the easing of the end of the cycle. U.S. also had their cut as well. So Governor Tiff Macklin, though, says that this is about right where it should be. 2% inflation, weak demand, GDP is sitting pretty low, below 1% for the second half of this year, maybe over 1% for 26. Pretty abysmal numbers. As exports have plunged, trade uncertainty, obviously slower immigration, has hit them. But now, how do you think this ending of the Bank of Canada's easing cycle is going to affect sort of our ability to navigate internally the way that we stimulate growth? And with the budget coming out with Carney trying to find ways to create his own stimulus.
I do get concerned that the market reaction might not be to be pleased with Canada. And all of a sudden, we start to see the drop of demand of our bonds, which then you start to worry about interest rates, etc. So November 4th is going to be a big day to see what's really going to happen here.
All right, John. Well, fresh off their stunning 6-1 victory in Game 5 of the World Series against the Dodgers, we've got Rookie of the Year, Trey Savage, 12 strikeouts. Did you watch that game? Unbelievable storylines that are coming out of this game, isn't it?
I did. You know what was the best part of the story is that I actually looked at my clock and I think it said 11:30 p.m. Whereas that Game 3, I went till 2 o'clock in the morning and I was like, okay, I tapped out. So I was just so relieved that this was ending at a reasonable time.
I know. Seeing an efficient baseball game is something that we all never thought we'd dream of after that 18-inning double game. 2 9-inning games in one is pretty crazy. But I want to shine a spotlight on something that maybe a lot of our listeners don't actually know about, which is about a homegrown innovation that is helping a lot of these teams catch up to these incredible pitchers. There is a company that has basically created this innovation out of Waterloo that is turning a lot of the technology on its head, the old school technology in baseball. I don't know if you know this, but there's a company out of Waterloo called Tradex Sports, founded in 2019 by TO University Waterloo alumni, that is essentially, no pun intended, hit it out of the park with their pitching machines. So you've heard about these, the legacy grandpa pitching machines that were just kind of throwing speed fastballs at you for practicing. Well, the technology is really taking it to the next level. And they basically have built this really super cool, high-tech robotic beast. It's like AI-powered wizardry almost. Okay, it uses real MLB data from like the, capturing of the pitcher's like release point, their velocity, the spin rate, the seam orientation. It can get up to 100 miles an hour. And there's a screen of the pitchers physically to show you what they look like from their release point. And it's basically flawless. And it shows real balls zipping right through the slot. And it's controlled by custom software. Now, these are expensive machines, obviously. So they usually don't travel with the team. So that's why home field advantage is such an advantage these days. But did you know that I think as of 24 MLB teams are using this software, including obviously the Toronto Blue Jays. And the Dodgers, they have it as well. But it's a Waterloo alumni company.
Wow, no, I wasn't aware of that. And it'll be interesting where I think it's next year they're going to now use the electronic umpiring.
Finally, yeah. Guess how much you think this? Guess how much this machine costs? You think for a team?
No,
15 to 20,000 a month. Yeah, 15 to 20,000 a month, and you have to sign a 3-year commitment, is what they say. Which is pretty cool. So you heard it here first here. Home field advantage is home field in Waterloo as well.
Hopefully it's going to be amazing. You have the machines to pitch. You have machines to pitch. You have machines to umpire. There'll be there'll be robots on the base pass, and
I know.
It'll be our lovely game of baseball.
Maybe one day. We'll see, John. All right, let's switching gears here. We got tariff talk back in the spotlight. The U.S. Senate voted 50-46 to nullify the tariffs on Canada, essentially highlighting some of the fractures around the GOP's inner circles. And obviously, Democratic Senator Tim Kaine led the charge to end the national emergencies, justifying tariffs, essentially saying these higher prices are hurting Americans as well in industries like farming and soybeans and things like that. Now, obviously, there is pressure now inside of Trump circles to decide what he wants to do next after he comes back from his Asia trip dealing with China. But, how do you think this Senate vote will impact the sort of US Canada trade negotiations and the ties we have to each other?
It's so hard to predict. I mean, we just saw the impact of the Doug Ford releasing the ads to the US marketplace. Trump got offended, big shock on that one there, increased tariffs by 10%. It's so hard to predict what the reaction would be. A rational person would look at, what was it, 4 Republicans crossed the
Yep, four of
floor
them.
to vote? You know, one would think, somebody would look at that and go, "Well, maybe we need to be a little bit careful." And I mean, the pundits in the United States who are very much right of center, you know, started from the very beginning saying, "Hey, I understand what you're doing with a lot of the countries in the world. I don't get it with Canada." We could leverage their energy, resources, etcetera, all to our advantage. So, the optimistic side of me says, you know, maybe that's where the opportunity lands, but the pessimistic side of me says, look at the pattern of behavior, and I just think we're in store just for more volatility.
It just doesn't feel like we're at the front of the line in negotiation priority with Trump and stuff. I mean, you got
Not at
deals
all.
announced with Japan, South Korea, Brazil, all these other countries that are not their
Venezuela,
neighbors. Venezuela are getting more attention from, deal negotiations than we are getting ourselves in Canada. That's the shocking part to me is that we're just not getting any time to really, and who
well,
knows what's happening behind closed doors. I think in the media, it portrays a different image.
yeah. Are you surprised that given that we were the only country that blasted with retaliatory tariffs with as opposed to biting our lip
Not
and
surprised, John.
being very you and I said this was a horrible strategy and we wanted to adopt the Claudia Scheinbaum strategy of, "Hey, be nice or we're going to impose." We didn't. We acted tough. The elbows up strategy has completely fallen on its face. And we're trying to recover from that. And again, you're not dealing with a normal attitude and a normal person. And if it requires you to to kiss some butt on here, then it becomes your own ego because we already know that the ego in the White House is beyond anything we've ever seen.
Yeah. Well, let's switch gears to our own internal strategy. We got the Bank of Canada cutting its benchmark rate by 25 basis points down to 2.25. Its fourth cut
Yep.
this year. Obviously signaling maybe this is the easing of the end of the cycle. U.S. also had their cut as well. So Governor Tiff Macklin though says that this is about right where it should be. With 2% inflation, weak demand, GDP is sitting pretty low, below 1% for the second half of this year, maybe over 1% for 26. Pretty abysmal numbers as exports have plunged, trade uncertainty, obviously slower immigration has hit them. But now, how do you think this ending of the Bank of Canada's easing cycle is going to affect sort of our ability to navigate internally the way that we stimulate growth? And with the budget coming out with Carney, trying to find ways to create his own stimulus, what sort of gains should we hope to see now as these kind of expectations of rate cuts are almost done and there's nothing else they can do besides stimulate it from the fiscal and non-monetary side?
Yeah, and as monetary policy is really a short term,
Of course.
you know, fix to smoothen out little adjustments. But I think that they're worried about the inflationary impact of the massive government spending that's expected. They're worried about triggering another asset bubble again. So I was not surprised at all to hear Tiff's comments, but I think trying to think that monetary policy is going to get us out of this mess, I think is not the right direction. Uh, we're going to see on November the 4th how the markets react to, what we expect to be a very significant pop in spending. And, my view is that even though there's going to be attempts to mask the spending by the segregation of capital versus operating, I think if it was truly just capital and, more in the sense of what, we view capital. Maybe there's not gonna be the reaction, but when we start to see that capital's definition is inappropriately broad, I do get concerned that the market reaction might not be to be pleased with Canada, and all of a sudden, we start to see the drop of demand of our bonds, which then you start to worry about interest rates, etcetera. So, November 4th is gonna be a big day to see what's really gonna happen here.
Yeah, you said this before. Just as soon as November 4th happens, watch the bond markets and see what they're predicting in terms of what it's going to mean for our economy going forward, because that's the first thing to fall in terms of an
Um,
indicator, right? Let's
all I'm
uh
wa
let's talk about something you've been writing about, and we still see more headlines coming out on the stablecoin surge and regulatory push for that. Obviously, stablecoins are booming here with 46 trillion USD in transactions last year, tripling visas, and Canadian fintech leaders are really pushing for regulation on this in next week's federal budget to avoid falling behind the US's Genius Act. Okay,
yeah,
we've got a lot of noise in Canadian startup land of deals happening here. We've had 3 deals, I think, announced in Canada recently. We've got the Canadian Stablecorp Q, CAD, the Loon, CADC, Tetra Digital Group's version, and VersaBanks as well. You've got the infrastructure players like Cybird coming in and putting their own sort of stamp on this. But the biggest thing I saw last night that I thought was pretty interesting is there's an announcement pending that MasterCard is eyeing a 1.5 to $2 billion acquisition of Zero Hash, which is a
yep,
stablecoin infrastructure firm. The company had recently raised about $100 million at a $1 billion valuation. So this is a big move from legacy payment rail providers, MasterCard, Visa, betting on crypto now that the Genius Act has gone into law, and more partnerships are being announced with Coinbase, and all these other deals are happening.
yep,
The US is just moving so fast on this. We need to get this solved. Hopefully by November 4th, we have some sort of framework to go, or else they're just going to blitz right past us.
yeah, yeah. No, I'm optimistic. Without, breaching any, confidentiality, I could just tell you that I have been, like, blown away at the speed of understanding of the criticality of this issue in government. I've never seen this before. And, a hat tip to reacting, and this is all post Genius Act. So this is really only since the 3rd week of July when I alerted everyone to, "Holy crap, this is not a payments issue, it's a deposits issue." And so I am pleased at the receptivity. I am optimistic that Canada will respond. It won't deal with, obviously the US demand for its own stable coins, but at least we have something here that will at least either prevent or at least slow down the leakage of deposits into the US system. But for your listeners, watch this stablecoin in 2 separate streams. There is the commercial transactions. When I say commercial, I don't mean with, companies. I'm talking massive, movement of capital between banks, governments, etcetera, and that will likely move first, separate and apart from those on the B2C side, which MasterCard and Visa currently dominate. In the United States, that's where there's some fascinating developments, and I'd say the one to really watch out for is Tempo, that's led by Stripe, that includes Shopify and other players. They're looking at global domination of the B2C space,
Hmm.
uh, and you'd say, "Well, who loses on that?" Well, big time, it's the credit card companies. So going back to now MasterCard, they see it. MasterCard and Visa in particular are under massive threat. Yes, they have great merchant adoption, and that's the only thing in the way. And if you have a company like Stripe, partnering with the Shopify's, etc., all of a sudden, the merchant distribution starts to become a fortress that maybe it is penetrable now.
Yeah, that's interesting on that side. I want to go back to the commercial side though. How much do you know about the sort of ledger entries that the Bank of Canada or the Federal Reserve makes when they issue overnight funds to the global banks or their like large player banks, right? Why are those not going to be put on a Canadian owned
They will.
stablecoin? Like
That's
that
where
makes the first sense as possible.
that's where it's gonna be the first mover. That's the easiest one
It's
because
so easy because
it's
there's actually
totally
nothing exchanged there. It's just a ledger entry between the
ledger
bank's deposits and what the
easy
Bank of Canada window is offering them overnight.
and real-time settlement.
Real time settlement,
So,
right?
the whole concept for your listeners about float charge, it goes away. So this is where it will happen first. This is the trillions of dollars that get moved, and right now they're on traditional rails,
Of
and
course.
there are traditional payment providers. These are not the credit card rails. These are ancient rails, and if you've heard of things like Swift or the ACCS, which is the clearinghouse, these sorts of things have been built on ancient technology. These are the things that are going to get replaced immediately with monstrous volume. The B2C does involve customer adoption. That will lag for sure for the medium to long term, but this is all headed in one direction. And basically, payments will be on unified ledgers and will be on some sort of blockchain technology, whether it's public blockchains or will be sovereign blockchains
Yeah, I think the system you're referring to that's pretty old is called Lynx,
and
LYNX.
links.
That's the
Links is another.
primary payment rail used by the Bank of Canada to issue and settle funds with Canadian banks. It's basically for high value payments, right? And it's owned and operated by Payments Canada, but it's overseen by the Bank of Canada. So do you think
Right.
they're going to replace Lynx with their own sort of stablecoin infrastructure for
Well,
real-time rails?
here is going to be the big challenge. So, Payments Canada has been working on this
It's
massive
just they said that they were planning to launch something around
2026.
2026 to enable instant 24/7 payments, but
Yeah,
it's not
yes.
yet operational as of now, is it?
No, no, it's only 10 years late. Um, sorry, folks, no insult to my Payments Canada folks that I know, but it is about 10 years late.
Because
The
I
bank
think it's like daily settlements of like 4 or 500 billion.
Yeah, yeah, the name that you might hear, it's called RTR,
Yeah.
Real Time Rails, and this is to replace that old system, but it's not on a unified ledger. It
No.
doesn't use blockchain technology. So here is the question. You spend 10 years to build something that the moment you operationalize it might be out of date. Now, maybe there is a bridge period where you gotta parallel the 2, but this is going to be the dialogue, and it's gonna be highly controversial, but you nailed it. Payments is what makes the country move, and you don't really see it.
I'm excited to see this happening in real time. No pun intended there as well. All right, let's go on with the fintech side of things. Wealthsimple snags up to 750
Wow,
million CAD in a Series
good for
E
them,
at a
man.
$10
Jeez.
billion CAD post money valuation. Amazing story. Obviously, they started, a little in just in 2014, so just over 10 years to get to this milestone. They got 100 billion in assets under management or administration. AUA is what they call it. This is amazing because they had 50, it took them about 9 years to get to 50 billion. And then they doubled it in 1 year, which is really amazing. And their goal is obviously to get to 1 trillion in assets under administration by 2034. I guess no IPO, obviously, in timeline, given right now, given this fundraising round, they're going to try to obviously use this for acquisitions, building out more features, building out more products for Canadian customers. But what do you think this does for the influence over global investors' appetite for other Canadian investment opportunities? Everyone wants to say, what's the next Shopify? And that was what got people interested in betting on earlier stage Canadian tech companies. Is Wealthsimple the next one that people are going to say, okay, that one made it work as a local Canadian product because it pulled back from all the other markets. Maybe we should look at other Canadian growth businesses as well.
Yeah, it certainly doesn't hurt. I would say, you know, the only challenge there is it is a Canadian domestic business, and again, I don't know what the split is on crypto AUM versus non-crypto, but crypto has been a monstrous, impact of that. So, um, you know, Mike Catchin again, like incredible kudos on trying to break into the legacy holdings by the banks, but I'm not sure outside of Canada many people particularly focus in on that. I contrast this with Shopify. Shopify's Canadian market was always like a rounding error. It was the United States,
Mhm.
and most people in the United States were shocked to know that Shopify was Canadian, right? So I don't think it's the same
You're
thing
right. Like,
from that.
they can't really go global now, maybe because it's already pulled back from that, and now it's really focused Canadian only, which is
Yeah, yeah,
interesting.
which is
Um,
great. It's
i
great, but yeah,
It's interesting too, I guess maybe that was, something that investors kind of forecasted into their valuation assumptions because you have companies that are just on the precipice of going global, and they're maybe only in the US market, and they're also being valued at 10 billion after the first 2 years of being created. So,
right.
there is probably a good, analogy of, like, how growth is really what investors care about, and if the growth is sort of only limited to you know, the borders we have in Canada and the population we can serve, that's gonna forecast into what investment growth they're gonna underwrite for.
And Matt, you know what? How I would view Wealthsimple? You can create a large business in a Canadian only market. There's not tons of those opportunities, but it is possible to break, the concern of the oligopolistic nature of many of our industries, whether it's telecom, media, banking,
Yeah.
etc. They prove it can be done. It's not easy to do. And so going back to, we're having our fights with the United States, and I keep on saying, what is the number one market to focus in on on the short term, not medium to long, is Canada, because we've always underexploited our own market, and particularly the statement is true with sovereign industries. Simple is not. I wouldn't consider this to be a sovereign industry per se, but it's giving you the, hey, you know what? Don't ignore your own backyard also, and they've proven you can make a great business.
I mean, financial services are pretty sovereign in our country. I mean, with the top 5 banks that have this license to print money, basically.
Yeah,
It's
yeah,
pretty
moving
sovereign,
close.
supported by the government, but it's not spoken about like that, I guess.
Yeah,
John,
not stupid, but it's regulatory capture. I think
there you
it's a
go.
difference.
A big bets, and speaking of big bets, you have obviously been kind of poo-pooing a little bit of the money that's been sloshing around out there, but Meta's big bet is starting to cost its company some money.
Oh, yeah,
They whiffed on their Q3
which
numbers. Free cash flow is down 33%, cash reserves dropped by 43% since year end. But Zuckerberg, he's sticking to it. He's betting even more money on a 2026 capex budget on talent and data centers. Stock was down 12% today as we're recording on Thursday, October 30th. Still up 10% on the year, but as you mentioned, it's lost a couple hundred billion in market cap just between friends. And this contrasts Google's numbers, which search and cloud had record numbers, free cash flow up 39%, stocks up 5% today. And Microsoft, Azure's up 40% growth, free cash flow up 32%. Obviously, CapEx is rising for all of them, but Meta is really the one who's draining their free cash flow reserves and also increasing spend and hurting their margins. So, how do you think Meta's spending spree is going to play out when compared to the giants of like Google and Microsoft, who somehow are still making it work?
yeah, the difference is Meta is using all of their capex spent for really their internal purposes. uh, Microsoft and Google use the capex spend to serve other customers. I mean, also internally, that's the difference, right? So that's number one. Number two, and again, I wrote about this on 2 occasions now on LinkedIn in the last week and a half. I got shit upon by some folks, and I just said when Meta starts doing, it's not fraudulent accounting. I was very clear on that. But funny accounting to use SPVs, increase your cost of capital by over 100 basis points for the sole purpose of not having to record your liability for data centers onto your balance sheet. Holy jumping. Again, I have personal scar tissue. I was a global partner of Arthur Andersen when Enron did this. Again, it wasn't illegal. It wasn't even fraud. It was taking advantage of what was called the variable interest accounting rules, but obfuscating what the reality was. And Meta just did this. And Meta won for about 2 weeks by doing this, and now the markets have said, "You know what? Yeah, I am concerned," and wiped out $200 billion of market cap in overnight, getting concerned. So, hey, I'm not saying that, there's any fraud on here, but I thought that was egregious, and I think Meta what deserves to pay for trying to play accounting tricks.
You're saying that people are smart enough to look through sort of the
They
SPV structure that ties itself back to Meta, even though legally, structurally, it's not sort of set up that way. People are not foolish.
Yes, and one person who's in the space in the United States took great offense at me. We had a private conversation, snapped at me, and I just said, "Dude, I'm not saying it's illegal, but look very carefully at the accounting." And then as he reflected, and he said, "Okay, you know what? You're right. Really didn't wish they did the cute accounting." Included in order to make the rules work, they divided up the lease terms of the 20 whatever 11 data centers into 4-year increments in order to ensure that you don't book the liability, but you treat it as an operating lease. Like, for God's sakes, you're jumping through hoops. It's the tail wagging the dog.
Right.
This is when you get into trouble. And I was sounding the alarm bell saying, "Don't do that," and they did it. So, just what
Liabilities don't care about calendar year end dates. They're still liabilities on January
Yeah.
1st the next year. So we'll see how this plays out. But, OpenAI wrapped up a pretty long restructuring process, paving a way for a future
Yep,
IPO as a reported $1 trillion valuation to fund its massive AI cost as well. Projected to spend $115 billion through 2029 while keeping nonprofit board control. So just to lay it out for everyone, how they kind of structured this, investor stakes are converting to equity. They're lifting those return caps that they had prior when they started raising money early on from like Reid Hoffman and the Node and everyone. Microsoft holds 27% of the company. It's 135 billion at the recent $500 billion valuation and committing 250 billion for servers. The nonprofit gets 26%, 130 billion plus some warrants for more at a $5 trillion valuation to fund safety research. And employees and investors are going to share around 26%. Okay. So, and I think the new investors, the new $41 billion round, SoftBank was 22.5, gives other investors 15%. Microsoft's deal, though, is so interesting how it evolved. Okay. So they still got the model access post AGI with guardrails. Azure is exclusive until then. But there's freedom for like other rivals to kind of play in there
right,
as well. Microsoft has invested $13 billion in OpenAI to date, with 11.6 billion funded as of September of this year, securing that 27% stake, now valued at 135 billion on the 500. Just double that at the trillion. So they're 10x right now on the 13 billion.
right.
It'll be a 20x on a $13 billion investment. Is that not one of the greatest investments of all time?
Well, yeah, we'll see on, on liquid their ability to liquidate that investment, but I love what Microsoft did, and you saw it. Remember we were confused about why are they creating this optionality? Is there big tension? So they've got their cake and eat it too. So they're not fully reliant anymore on OpenAI, and they've got their toehold. And we know it'd be pretty amusing. They use their toehold return to fund a competitor ultimately, or a competitive business to OpenAI would be the most amusing result. But I think Microsoft has come out as a winner on this.
All right, John, we'll have to see until next time. Go Jays, go.
All right, see ya.